Good evening, my lovelies. Woo-wee. Do we have a fucking stream for you? Woo-wee. Woo-wee. Holy shit. Can we get a holy shit here? Huh? On what this market is accomplishing? Holy shit. We had a little 20 crossing the 50 here. Everything curling up. Even the 200's curling up even before we get there. Holy crap, man. All right, let's go through everything we've been talking about, where we're at now, where we're going, okay? Let's go. We got a lot of things to say. All right. Okay, we're bullish. Number one, we're bullish. Okay, if you're bearish, you're a fucking idiot. Go home. And if you want to stay bearish, that's fine by me. I don't care. You lose all your money as we go back to all-time highs. I don't care. That's fine. If you're bullish, we're going to continue to be bullish. We're going to get an end-of-year rally. I expect some volatility in January, early February. And then I want to see the all-time high rally, March into May. That's where I think we're headed. Okay? This year has been an absolute shit show. Straight up, point blank, absolute shit show. Everything that I thought was going to happen got pushed back 1 to 2 months or 3 to 4 months. And this is because in a normal bull market, you get corrections that bounce off support and rip. And here we literally have a fake bear market. It's basically a half of a bear market minus the big blow off bottom that you normally get, like the financial crisis or 2001, whatever. And we've been saying, like, we're not going to get that final flush. The VIX, the way it has moved, and the way the VIX is not going to have that big flush this year. And that was just to it. We got the glitch trade January 26th down to 364. So we knew the bottom was this level here. And look how toxic this was, how we overextended through it. And that's what waves do. It's very, very difficult. It's very stressful. It's very hard to understand that. And that just is what it is. So we violently bounced off this. We had it we talked about how violently toxic this was. And so these 2 days were pricing in future volatility. That's what these 2 days were doing. So when we made those videos about this falling down here, this was definitely a possibility. Really should have made more of a point for that. I was just really thinking that this rally here was this rally here. I really didn't think that we were going to have another full cycle to the downside because people were already insanely bearish here. Insanely bearish. And we went through a full negative wave cycle here with earnings, the mega caps ripping higher, everyone caught on the wrong side of the trade. Literally, it was a perfect setup to just rip out. Literally. And that was just the power of this bear market, of this downtrend. This move here, okay? This move here, for us to have done this and then still have another blow off bottom, this here is pricing in Armageddon. I've never seen this much downward stabilization in my life. 10 years. I've never seen this. I don't even think it did this back in the 08 dot-com bubble. Maybe the dot-com bubble in 97, 98 correction, and it priced in the next 10 years. That might be the last time that it did something like this. This is insane what this is pricing in. For example, this was in no man's land correction. We have videos talking about it. We always talk about it. This priced in this. This prices in this. What the fuck is this gonna price in? So you just extrapolate this whole cup to this. We're pricing in literally Armageddon. And that's very indicative of what I see for the next 5-7 years or so, basically to like 2028-ish. Higher highs and lower lows. It's going to be absolute insanity. It's good in a way because we know what we're looking at, and it finally played itself out. So we wanted to see something down to like 390, 380 on this drop off. We kind of got that kick up and then the hard rejection to come down. We thought that we might have rallied up. What do we say? We went down and then we would come up and then roll over, or we would have went up into the gap and then hard rejected. And that's what happened. It happened twice. Now, we thought that we would go down 3 here. We made a video right here. We did not expect it to just keep going. We did not expect this to retest 360. Really tough. Really, really tough. But we got it. So, things to acknowledge. UVXY new algo happened right here on the 27th to turn the market bullish for a tradable bottom. And here we are. We have diverged positively ever since then. Okay? So, to stop this momentum down, you get a little overextension. This is the 200 weekly right here at 355. So we double tapped it. When we got here, we're looking at the glitch trade. We went right through it. But if you look at the bigger frame, you'll see how this was a bit of an overextension, but still part of the larger wave structure. So very toxic that it did this in terms of trading, but it makes sense, which is good. It's very bullish. We now have right here, we were looking for a gap up and rip or a gap down, and we go straight up. And so like literally 11 a.m. is when we put on stock twits and on Twitter saying that we expect this could literally be the bottom. If it's not a bottom, it's the bottom. And we stood by that, and it looked insane. And here we go. The few things that we have to talk about as to what has happened here and the importance of them. Okay. I probably should have made a video here, but the last video I made, we talked about we want to see a rally up to about the 200-day moving average, and we still haven't gotten there. And the wave still hasn't played out yet, so I kind of just let it be and let it play out because I was pretty confident that we were going to get there. This wave pattern that it did is insanely bullish. We're so bullish, it's insane. If you're bearish right now, you're fucked. You're fucked. If you're bearish positioning, if you're short, net short, if you're psychologically bearish, where you're not even coming to terms yet that we're bullish, you're fucked. Because the higher we go, the less you're going to want to buy. The higher we go, the more puts you're going to want to buy. And if you do buy calls, you're going to buy such little calls because you don't trust it. This is the problem with people being psychologically stuck in something, that they can't get out of it. Now, there's a few reasons why we were going to rip out. Okay, we talked about the October 13th print from 2020 and how if it was a bottom, we would rip higher into October 28th, the first or second day of November. Literally exactly October 28th, first or second day of November. And we were looking for it would go straight up, and then you'd want to see a blow off move and then a rollover, because it's doing the exact opposite of what it did from 2020, going into the vaccine print, which is about November 9th or 10th. November 9th, November 10th. The one thing about that was that we were scared because if this plays out exactly the opposite, we would gap down and drop about 6%. But the wave pattern was setting up to rip 5-6%. So it needed to break that pattern, and the CPI was the breaking of the pattern. The thing that we wanted to see here was where we crash into the CPI and then explode higher happened a month later. So this correction has just been brutally just overdone and constantly bearish in pricing and future volatility. This is unbelievable what it did. We are going to rip so hard out of this, and people are not going to believe it. You're talking like JP Morgan type rippage. Like it's just going to be unrelenting type of stupidity. Like look at that. Like look at that chart. It's so stupid. Okay, the important things that we have to look for. Here we had a VIX swell. Market went up, the VIX went up, right? So September 7th, September 12th. September 7th, September 12th. Look at that. So the VIX went up here. It's a Monday, so it normally would go up, but that's irregular. You're crashing into massive support. These days were very, very weird. Where was it? September 6th. September 6th. So the VIX went up big on such a small down day, 0.4%. So there was a very weird movement going on here. The market gapped down and the VIX was going down. And then we gapped up on the 12th, and then the VIX was going up. Let's see, the 12th, and the VIX was up on the Monday. Something very weird was going on with the VIX those days. If you followed it linearly, 1-to-1 ratio, it was very, very weird. Another thing is the VIX was acting very, very weird here. The VIX was going down when the market dropped 5%. November 1st, dropped 5.5% to November 3rd, right? And then we went up. November, I already forgot it because it's late. November 1st. Right here. So we dropped 5% in the S&P from here to here. And the VIX went down. And this is the algo price, 25.79. And you can see how it reacted with it. Bounced up, rejected, spiked up, rejected. Okay, we got a gap now at the VIX that we're looking for here. I actually want to see it break this low in November or early December. I actually want to see it break it in November. We'll see if we get it because there's a gap here. We bounce off the gap and then flash crash down through it, something like that. Then we'd expect to see some volatility, but we'll see. We'll see what happens. Everyone's expecting for a bounce here. Anyway, so the VIX was going down when the market was going down big. Something is very awkward. Why is it doing that? Because it is the opposite wave cycle of this. You can see how weird this was and how weird this was. Huge bear flag into a rip. This was a very, very irregular bear flag, specifically because of the VIX and how it traded. This was a very, very weird spike into the huge crash because it prices in a future move, because the move that you're seeing is not the actual move. And sometimes it can do that on a couple of days or even a couple of weeks basis, sometimes even a couple of months, which I think that's where we're headed for. It did it pre-COVID, and I think we're about to go into a COVID, a fractal of the COVID move. You can see how weird the move was on the Jobs Friday. It was one of the most toxic days of the year, that it made higher highs and then lower lows from the pre-market with absolutely no direction. There was no specificity to it whatsoever. It was literally like boop, 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 just ping-ponging back and forth insanely tight because it was catching the weight of this. It was catching the weight of this after this drop here. And so there was extreme compression with ping-ponging. And then you get a nice tight coil. The Bitcoin crash that happened here. And now Bitcoin is decoupled from the market. So we spiked and then we came down, and this is a stabilizer up from here to there. And now you get this really tight coil. We said to buy calls right at 3:59 p.m. for this day because of what it's trying to do. This is a perfect setup. People thinking that we're going to crash, going into a CPI that was very noticeably going to come down. Rents were coming over. There was a readjustment for the medical insurance. It was very, very obvious that CPI was coming lower. The fact of if the market sold off here, the whole wave structure was broken and something way worse was about to start. So it was, for me, it was extremely stressful because it had to happen. There's nothing left. You can't come back from this. If it happens, you're fucked. Like, everything changes. So for that just binary event, it's a very stressful, even though I was in calls and then we sold them and then we rolled them out into this week as well. So very irregular bear flag. So what it's representative of as a cup. We talked about this and how important this move here was. You get the gap up, the neutral print, and then the spike up into the 200. This is pricing in future up move. We talked about this multiple times. This move prices in future up move. Why? Because it broke resistance and then it violently got rejected. It never should have got there in this trend, in the downtrend, never should have gotten there. It's like it peeked its head out for a sec, for 1 week. This is why we got these really weird moves, because it needed to catch up to the downside. And so it caught up to the downside too much. And then we ended up needing to go to the upside. So now there's just this over compression to the upside, over compression to the downside, and then you get the compression between the up move and the down move. And that's why these 2 weeks were insane. So much volatility, so much ping-ponging, because you're getting the compression of both. And it finally got released to the upside. I don't think we retest lower at all. I think this is a bear trap. This is what should have fucking happened. This is what we wanted to see here. What we want to see this whole last 3-4 months is you get a setup where bears think that it's bearish, insanely bearish, and it fucks them, completely traps them, and does not relent. That is what we need for the trend to be what it is. You need it to be absolutely unrelenting, where bears keep buying puts in the rally, and then you end up just go and go and go and go. That is exactly what you'd want to see off of a bottom of this caliber. That's exactly what you'd want to see. And then you go so far that they don't even want to buy calls. I'm not going to buy calls up here. Let's say we get up to here by December 1st, 420 on the gap. Who's buying calls up here? What bear is buying a call up here? 21% off the bottom in 1 month. 1.5 months. Who's buying calls up here? Not a bear. That's how it sets up. And this is exactly a perfect scenario to fuck the bears and trap them out. If you're net short on any stock, you're going to get crushed. There's so many different things that we need to talk about. But specifically, this is very important. This VIX swell happened here, and then the VIX compression that happened here. It's representative of the wave pattern. So you can see how this swell happens right at the 0 line, so it activates on the 0 line and gets hard rejected. Then it compresses down into the 0 line and it gets hard rejected. So you can literally see the effect of this cup. You can literally see that. And this is the first true positive move of the entire year. And it's happening right before the end of the year. Just like Evergrande priced in future volatility right before the end of the year. Also, that move in November priced it in right before the end of the year so that it could roll over. This is pricing in future movement into next year. It's going to be breaking out. What I don't know is I don't know exactly how this plays out. What I do know is that we should rally into the end of the year. I don't know if it's going to be choppy. I don't know if it's going to be relentless. We don't know yet. This week is very, very telling. What I do know, though, is the memes are going to absolutely fucking explode the next 3 to 5 weeks now, into the middle of December, I would say. They're going to absolutely rip. We got Tilray next week, or the weed stocks. They are passing the bill. They look ready to absolutely explode. Bitcoin, I actually think, underperforms the market and kind of just sits around for the next 2 months into the end of the year. I actually think Bitcoin sits around. There's so much negativity around it, and the technicals are setting up for a January start of a rally for the new year. Could it go up to 20K or whatever? Yeah, but it's not going to make as big of a move as here. I expect to see, we're going to the 422 gap. That may be the first kickback of this rally. Anything like 1, even 2%. If we go up like 3%, even a 2% drop of that, it's not a big deal. But anything sizable, like a 4 or 5% drop off this, would be off that gap. I want to see. I think the top of this rally is going to be the end of January on the next Fed meeting, the end of January, and then you get some sort of volatility. And I want to see at least that top 430, whatever, 432. I can see even up to 440 or 450 in January before we get some sort of a sell-off. Which would be a very violent sell-off, and it make people very, very bearish again. And I do expect to see a COVID-like rally from February to April-ish, somewhere around there. If we sell off January into February, I want to see that bottom, a massive candle off the bottom, like this, and I would be expecting a massive rally into literally March into April. I want to see a May top. As of right now, that's where I'm standing. If the market doesn't stop at all and we literally just rip the fuck out, the end of January could be a top. And I'm telling you, when we top in next year, we're going to flash crash faster than COVID and possibly more than it. It's going to be literally a 2-week crash that goes down 30 or 40%. It's going to be insane. So you're talking like 500 down to the top of COVID. So yeah, like 36% correction in literally less than 2 weeks. This is what I see. So UVXY has the glitch trade still at 4.34. People don't realize this, and the way the wave pattern is set up currently. The way this is set up currently is, there it is. So the glitch trade happened here in May of 21. So it's going to get there. Wherever the market is when it gets there, that's about where the market will be topping. It depends, because it gets weird and awkward. It doesn't have to touch it. It could overextend through it, things like that. And once UVXY gets this low, the market, if this goes from here to here, the market could literally go up 10%. Like, it gets really weird and awkward. So the exact price is dependent on the actual VIX itself and how it moves. So by the time it gets there, we'll talk about it then, but that's not a problem right now. So what I actually think happens, and we've been talking about this all fucking year, I want to see a violent retest of this green line. Okay, it's the 1-2 punch. It's a 100-year trend. It goes back to the Great Depression. We're gonna have a violent retest of that, and this is around 5,000. Right around 5,000. Think about a top where we hit 5,000, break all-time highs, and we hit 5,000. You think the bears are going to be around? Fuck no, the bears aren't going to be around. And then the crash that they've been crying for all year will finally happen. That is how the waves are set up. Normal people cannot time tops. They don't know how. They don't know what to look for. They don't have the balls to do it. They don't even have the money to do it. This is why if you don't know how to time a top in a market, a true top in a market, you should never be bearish. Period, ever. If you don't know how to time a top in the market specifically really well, you will never time the top in the market ever. And even if you YOLO and you get lucky, you will never hold long enough through the whole entire crash. One, if you're bearish here and you go all the way up, if it drops 10% in 2 days, you take profit, because you literally spent 6 months eating shit. And then as soon as you get a 10% drop, okay, this can't drop any further. It's not going to keep going. I'm going to take my profit, and then I'll wait for a bounce, and then I'll short it up there. Yeah, that's what you'll do. And then that's what that'll do. So you cover your short, whatever you got, and it'll keep going. Like, that is the design of how crashes will happen and how it will fuck you no matter what. So unless you know exactly what you're doing, you need the skill to do it. You need the grit and the balls and the patience to do it. You need the money to do it. It's very difficult to literally time the top, hold the position through, and have the money to do it, and have the balls to have the money to put the position up to do it. It's very, very difficult. So this is what we're looking for. That's my goal, somewhere between March and May. What will short term? We got targets 42, 42. Like, there's so many things here. So many things here. 4,200, 4,110. There's a shit ton of traffic right here. If we were looking at symmetry of last year into this year, again, because of what happened right here, to October 13th, into this, into the top, into the vaccine date and the rip, the exact same thing happened. Where was it? December 15th, where the market ripped on bad news. And then we rolled over into the new year. It's possible if we rally into the December CPI Fed meeting and we're pretty high, it's possible that we sell off. Like, if we're high and like the CPI comes in lower and like we explode above 430 or something, and then the Fed like says, okay, we're lowering rates, or they do a 50 basis point hike, that it will sell off. So like, this will be the correction off of this, something like that, because now that you have really good news and you're breaking resistances, and then this is the time to rest. Like, that's exactly how waves work in psychology and stuff. So something like that, it's possible, where you have a violent sell-off on really good news and people don't know why, and blah, blah, blah. That's one target. I really can't tell what it's going to do exactly. It's gonna get to the 200. This was our target, 4410. Everyone in the universe is looking at the 200 day and this downtrend. Everyone in the fucking universe. Everyone. They all drew the line, and in this type of unique environment, that won't play out. In this unique environment, that will not play out. Okay, what I would love to see is something like it did here around the 100, where it went into it, got rejected, and then gapped above it, dropped into it, and then ripped off of it. I don't know if it does exactly the same, but if you start seeing it doing like that, then you'd use it as a template. Oh, this is the thing I want to say with Thanksgiving. There you go. Thanksgiving, we saw that it was possibly that it was going to flash crash the night of Thanksgiving. And I just didn't believe it because I've never seen anything like that before. And lo and behold, 8 p.m. futures open down 2%. Oh, fuck. Fuck. Like, god damn it. Like, why would it do that? I was like, it looked like it hit the 100-year trend line. It's not going to do it, right? It's not going to do it, right? And then it did it. I was like, fuck. So it's actually possible because Thanksgiving and holidays, as everyone knows, Christmas, Easter, Labor Day, Memorial, like they're always inflection points. 4th of July, they're very commonly major inflection points in the trends. Why? I don't know, but it's very common, whether the major trend or the short-term trend. So it's possible that we actually go up to the 200-day. We do the dance this week, right? Tuesday is November 15th. They're talking about the next Fed balance sheet runoff, which is big and scary and blah, blah, blah. Wednesday is the new VIX futures, which when you start a new VIX candle, you usually get that upper wick, so which would be more volatility starting Wednesday. So somewhere between like Tuesday and Thursday, I would expect volatility. Like it's possibly we do the exact pattern as what we did last week, where we went up Monday, Tuesday, and then rolled over into Wednesday, retested the weekly open price, and then exploded off of it. Because that's what we actually bouncing off of that. As soon as we hit it on Wednesday there, we bounced off of it at like 2-3 p.m. bunch, and then we sold off into the close. So like that final flush was the bear trap, and then it went. It's possible we do this was a bearish bias move, right? Bear flag, and it reverses. It's possible we do the same thing, but with the bullish bias. So we kind of like go up into the Tuesday, we hit that, we hit this, everyone's looking at it. Aha, I'm the smartest person in the world. We sell off wherever we go. And then somewhere like Wednesday, Thursday, we click and we start going up and we break it. I don't think anyone would expect us to just go up to it, get rejected, and go right through it. No one would expect us to go right through it either. Like that's probably the least likely thing people expect. But it's very possible that I think it's very probable that we do something like that. There's a lot of traffic here at this 403 to 406 area, and then we have the 4080 on the SPX. Who knows if we you don't need to touch it. You can even get close to it. It's a 200-day, so it's not an exact print. It's rejected. And so if we did the exact thing as last year in Thanksgiving, we got wrecked on Thanksgiving that night. This year we might explode on Thanksgiving. That's what I'm going to go for. So if that's the case, you'd want to see it get to this by Thursday, Friday, and then maybe pop on Monday next week, and then kind of go down into Thanksgiving, which is the Thursday. So you get Monday up, and then you get Tuesday, Wednesday down, and then the Friday you go up. But you would be somewhere around the 200, whether you're above it or you're below it. And then you continue the rally out of it going into the end of November. And this is all consistent with, I see a massive meme rally in the next 4 weeks or so. Like we literally called it, like AMC, where we bought 100 contracts last week at like 6.1 or some shit, or even lower. I think we may even bought them in the 5s. Like it's huge, just huge rallies coming for all this stuff. And we are bullish. There's no doubt about it that we are bullish. Absolutely no doubt about it. You can't put months and months and months and months glitch trades together and it just not be. Can the chop be different? Can we literally come back and like get a lower wick into the 20 weekly? Yep. Could we go to 390, 3900? Yeah, I guess. I guess. I really don't think we do, but that's why this year has been so fucking toxic. It's like 50-50 on the, yeah, I think that's less likely, and it just literally does it. That to me is like more bear market environment rather than, it's just like more bear market type of environment. But I think we bottomed, so we should actually be trading differently than we have all year. And so it's very fucking telling this week and next if we start trading differently than we have all year. And I think people are going to be extremely shocked to see that we will. I really do. Either we break this week or we break it highly likely on Thanksgiving. Specifically, I want to talk about the pattern, the wave cycle of this, okay? When we had a huge explosion here, okay? Huge explosion October 28th, okay? Look at that, okay? You don't click like this. You had a blow off move and then you click on a report, I forgot what it was. And then you look at that. just pure like boom, right? And then you gap down on Monday. That don't make sense. That don't make sense. Or if it does do that, okay, cool. You gap down and now you're going to go up. And then that happened. You're like, what the fuck is going on? And when you do something like that, this is called a stabilizer. This is what it does. You stabilize up and you go down, you set up for a big move. So this went up and you can see this day traded so like vomit, just pure like down momentum, but it couldn't go down. It was just disgusting trade. And then you have this where you could cut this uptrend with a knife, just straight up in this super weird coil, right? And when you get that, that's very indicative of a downtrend that really wants to go down but can't. This really wants to go down but can't. It's like Elliott wave. It's just waves. It's like if you have to complete the wave and you have to have the correction, fill the gap, whatever it is, it has to do it. And so it trades very weird like that. So fill the gap and then whoosh, get fucked, right? Why would it do this though? Why would it have this massive fucking move and then instantly just get cut off at the knees? That doesn't make any sense. Doesn't make any sense. There was no news for it. There was nothing. And so it's, to me, this was setting up for a massive move. So what do we have? Then we had the Fed, and the Fed day felt like, you know how everybody last November, December was screaming at the Fed to raise rates, and they kept saying, oh, we're not going to raise rates forever. We're not going to raise rates in November. And then we're not even thinking about it, right? And then December comes, you're like, yeah, we're going to have a whole dot plot. We're going to be raising rates all year. And it was like, what the fuck? That's what this felt like. Everyone is like so fucking negative, right? We had the most SPX options in history right here. We had the put to call ratio. I forgot which week. It was one of these weeks where I think it was this week where it matched as much as the COVID bottom on a weekly basis. Like these are really big things that were happening. Super negative, just everybody's super negative. And so I felt like this day was what we did last November. It's like an overextension of sentiment. Like the Fed will definitely keep raising, and he may even need to raise higher than he expected before. Holy shit, like, oh my God, the Fed's gonna crush the economy. It just felt overdone. It felt like last November where people are getting overly done, and now it's gonna get snapped back because people just like over positions. That's exactly what it felt like. And lo and behold, we get this really weird trading move. If the market is bullish, it needs to hold this. And it did. And then we got this huge pop into this weird coil. This is a really weird coil. Look at this. Look at it stepping down. That is exactly what you would want. Look at it the whole time. It's stepping down in this like arc, right? That is a massive coil with that as a stabilizer. And you would want to see and right at the end of the day, it activates. You'd want to see a violent spike at the end of the day. What do you get? Right there. The end of the day, you'd want to see a violent spike that represents like it clicked, like it's about to coil to the upside. And there it is. So then what would you want to see all night? You'd want to see it go sideways and up. That's what you'd want to see because the bottom of momentum is right there. It can't go any lower. It's about to coil spring. And so what do you get? Literally, it got exactly that. So it was playing out perfectly for the most ridiculous up move ever, but it was so fucking scary because if it didn't happen, good night. There is no wave pattern for this if it went lower. So when you have a bearish bias, so like it just wanted to go lower. It's like somebody's dead weight. You're like trying to carry them and they're just like deliberately dead weight into you. That's what this represents. So you have a massively big move into pure dead weight. And then the weird VIX move as well, right? Why the fuck is the VIX going down here? Because the market isn't truly dropping. It's preparing for an up move. It's coiling. It's compressing the momentum off of here. That's why the VIX doesn't move like that. People have all these different explanations as to the who's buying what and the put premium and the blah, 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 blah. It's about wave dynamic in the market and what it's actually doing. And so it actually had the compression, the weird movement, and the click here. So what we want to see, so that's very, very important. That's representative of a fake bear flag of massively negative sentiment reversing. The probability that this is a clean reversal is insanely high. There is no reason for this to fail. The larger wave pattern was bullish to begin with. This is what we were expecting. Clean, very fucking clean. You can't make it up. You can't change it around. Okay. Now, if you're a bear, you have the thesis that the Fed is going to raise rates and it's going to crush the economy. Okay. Number one, the economy doesn't break very easily. Okay. If you traded the stock market for a while, you realize the American economy is a fucking beast. It is a beast. You cannot stop it. It is unrelenting. It's ridiculous. Okay. It's very hard to stop the American economy. Okay. Number one. Number two, stocks are moving in relation purely to CPI. Purely. Okay. Earnings are coming down, but they're not coming down fast enough as people want it. People keep saying the next leg to drop is the earnings. We expect to see this 3,400 and 3,200. Bite at 3,200. Gorge at 3,000. That's stupid bullshit they kept playing. All that negativity. So many headlines of negativity. You suck a dick. So it's playing purely off of the CPI, right? We had 5% here, and then everything started ripping higher right around November. We went from 5 to 9% the whole year, right? Everything is based off of that, because then PE values improve instantly as soon as that comes down, as soon as the dollar comes down. And we also think that the dollar topped as well, at least short term. Like, oh, is that a trend break? Where do we think that's going? Are we going to retest this? We could retest this week, actually, which would be which would cause a kickback in the market, right? So that's something to be aware of. The 10-year, look at that. Beautiful. We want to see that gap fill 3.6. If this goes down to 3.6, that's really good for the market. It's definitely going to be pumping more. I think this is pure exhaustion. I think this is absolutely pure exhaustion for 8, 12 weeks in a row. That's probably the longest streak I think it's ever had. This is going much lower. This is going much lower. I believe that it actually failed here. It wanted to go lower, but this is pricing in a future move. The way it traded was that it wants to go lower, but can't. That's the way this traded. And so you end up getting a move like this 12 weeks in a row. Okay. Do you see how perfectly straight that is? Right? That's not normal. That's very, very, very irregular. Oh, it's a perfect trend. No, it's very irregular. When you have it broke, it wanted to go lower, but couldn't. It gets caught on this ridiculous move off of the COVID bottom. Wants to go lower, can't, gets caught, gets tossed up. And then you could see every single time, wants to go lower, keeps coiling. And so if it finally breaks, it should get wrecked. And that's what it did. That's what it did. So it's doing exactly what you'd expect. This is pricing in a future move. So yields will go much higher in the future. Somewhere, somehow, it is going to go higher. And it's going to destroy everything. It's going to be a huge problem. Okay? That's not what we're worried about right now. It's going to go lower. Okay? Into next year, into the first few months. What we need to be aware of is the lowering inflation. Okay? It takes away the pressure of the Fed and companies getting absolutely destroyed and the dollar coming down. A lot of companies were talking about how the strong dollar was a big problem on their earnings. Okay. So that's another thing. Airlines. Okay. Airlines, we literally called Boeing at like fucking 150. How this looks like it's actually breaking out. Look how unrelenting this is, okay? The companies that are most correlated with the decreasing inflation are airlines. The companies that are most correlated with an increasing inflation is waste management. Something you should always remember. Airlines look like they're going to rip. They look like they're going to absolutely rip. They look so unbelievably good. Okay? Look at this. It looks so good. It looks like this is going to rip up to the zero line going into like March. That means inflation is going to get fucking annihilated. And what other companies? Like you got all the American Airlines, the United Airlines, and then the cruises. And what's outperforming right now in the market? Financials and industrials. Okay, they are ripping out of the universe. Like they put a hole. They're like at God. They're like having lunch with God, right? Why are cyclicals outperforming the market? Why would cyclicals be outperforming right now? Doesn't make sense, right? Unless inflation's about to get fucking obliterated. That is going way higher. This is about to MACD cross in December 20th. I bet that they pump on earnings. I bet they're going to rip these next 3 to 6 months. Okay? So inflation's coming down. Airline stocks look like they're about to rip. Everything is set up for this, and the bears are caught off sides. Everyone is positioned net short. No one believes in the rally. There's so much cash on the sidelines. The technicals were set up for this. There's still a glitch trade to hit on UVXY. Everything is perfect. The path of it, that's unknown. That's a trader's delight, okay? That's a trader's delight. There's so many different things we could look for this. There's so many different things that we can see here. There's so many different things. Okay, we're going to just get the same thing as this. We're going to curl out. We're going to go up into this. And then right around April, May, it's going to do one of those. So kind of like this. Kind of like this. You get coiled out. You have an insane failure here in August of 2019. And then it gets coiled out in this perfect uptrend like we just talked about. This went straight up. This got coiled out. So it wants to go lower but can't. It's going to be the same fucking exact thing. This wants to go lower but can't. And that's just a function. It's a function of the fundamentals, of the wave dynamic, the technicals, the glitch trades. Like everything kind of knows where it's going. So actually it's not kind of, they know where they're going. So it's just a function of it. So that's what's going to happen. It's what's going to happen without a doubt. Oh, and the last thing, which is the craziest part of it, is the lunar eclipse happened right here. The 8th. And it actually tanked the market into the next day, which was very scary. That lunar eclipses usually make the market go lower, and solar usually makes it go higher. So it'd be interesting. Look how the market, UVXY, you see how it did this? The market was ripping higher, and it kind of just chopped, never went down. October 25th, dropped like a fucking rock, right? Huge difference, right? That's a huge difference, right? What happened here? You want to know what happened right there? You want to know what happened right here? Solar eclipse happened right there in the morning. Right there. Crazy, right? Couldn't go, and solar eclipse, boom, gets absolutely rocked. 1025. But it doesn't make any sense. UVXY should have went lower. Look at this, 1025 right here. Look how high this is. And UVXY never cracked. And then it did this, and it barely moved. And UVXY went straight down here. Weird, right? But then look at the DMI. It actually crossed on the 25th. So it actually went positive. It's because it's so compressed. It's so compressed from this drop. It's like drop. It's trying to break it, finally breaks it. And then you get the first corrective wave, and then you get the continuation wave of that breaking. You get that? It's like trying to stick its head up and can't, and then finally does. And now the DMI is finally above it. Right? That makes sense? Also, this day was probably the most violent day I saw all year. On the 26th year, the most violent day I saw all year. Early in the morning, the spike here was insanity. Where was it? Right here. This was insane, this move. It went up 1.5%, but just the violency of it was insane. It was like the consumer sentiment, I think, at 10 a.m., something like that. It was like 0.6% in a split second, and then just went straight up because it's stabilizing for the drop. It's stabilizing up, stabilizes up, and then starts going lower to click. Peak momentum, see? Peak momentum starts going lower. And that's how waves work. And so there's just more probabilistic upside. So if that was a full wave cycle that pushed to the downside and just clicked, you expect this to drop here? You expect this to do this whole thing, do this finally click and then just roll over? Yeah, no, that's not going to happen. That's not going to happen. I would expect this to hit overbought before it does anything, honestly. Anything with volatility. So, yeah, that's all. There's just a lot to have said. And, yeah. But you got the future, you got the next few months going forward, you got the memes talked about, we got the inflation data. Also, all the inflation data and the headwinds and the crosswinds of like inflation and the Fed and earnings and this. Yes, eventually earnings will collapse. They're going very slow. Eventually the market will react to it. Yes, eventually the market, inflation won't go down below 4% next year. And so the Fed's going to have to raise rates again into 24, which I think will happen into the actual literal recession in 2024, not next year. We get the correction next year, but we don't get the recession next year. Oh, weird, right? Yeah. This is a very weird trading environment and fundamental environment going on with the economy, and how the trading is not equal to the economy. Just like when the COVID was around and we rallied all year. Yeah, everything is backwards. Everything is ass up, face down, backwards. That's what it is. All right? Stay vigilant out there. If this actually dropped down to here, that is a huge buying opportunity. That's a fucking gift. 2.1% Monday, Tuesday, that would be a gift, Aroni. It's actually interesting too. You could see how it dropped higher high, lower low, higher high, lower low. And it's the same exact thing right here. It was the same like weird move, boom. Weird move, boom. 1, 2, 3 weeks down, 1, 2, 3 weeks up. It's very nice. It's very nice. All right, I think that's it for tonight. Said a lot, and yeah, everything we've been saying, we're bullish and we're not going to break down. We're not going to get the VIX spike and shut up about it. And all the bears are going to get wiped out because they actually don't know what the fuck they're doing. But yeah, and Bitcoin will kind of trade sideways into the end of the year, and then next year everything goes. Anything else? Oh yeah, and so the lunar eclipse, I think, actually triggered the market. Even though it sold it off initially, I think it finally triggered it because this is the trigger. And the next eclipse is not until middle of April or end of April, which is exactly when I expect the market to roll over, the end of April or the first half of May, to be the top of the market. So like there's a lot of symmetry going on here, a lot. I really, really like it. And that would take about 6 months for UVXY to get down to about $4, which is seems very accurate. We can't rally for that long. We can't rally for like 12 to 18 months. UV, that wouldn't work. We can't just rally for like 2 months. That would be very unlikely. Is it possible? Yeah, but it's very unlikely. So yeah, good luck out there. Stay long. Stop trying to sell into this and then buy the dip or wait it out. Stay long. If you sell and you rip 3, 4, 5%, you're going to be fucked because you're not going to want to rebuy it up there. And then it might pull, dun, 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 a caterpillar. Unbelievable. Yeah, that looks normal. Yeah, that looks normal. All right, GG's. Have a good night. Enjoy your trading and good luck out there into the end of the year. Peace.